In order for Tesla to get to all-time highs, or even back to 300, the macro has to be positive. The market has to be in a good mood. The bull has to be running. To get to all-time highs, as noted in my earlier detailed prediction, the market has to actually be risk on. That's not going to happen without some help this week, okay? This week we will have 3 events that will pretty much determine what's going to happen for the rest of 2023. The economists have made their prediction. I'll talk about that down below. The market has already adjusted to those predictions. The expectations are roughly that the CPI and the PPI will be okay. Not great. The expectation then is that the Fed will be neutral in tone, even though the general sense is now that we need to have some decreases in the interest rates and that the Fed will start those as early as March, but no later than May. But for this week, the bull probably needs to at least see that there's no surprises on the downside. That's what they'll be looking for. If there's a surprise on the downside, risk could go off again. The market could have a very, very bad week, and that could be setting the tone for the rest of the year. If, however, we have some positive news that's coming out of the CPI or the PPI, or if the Fed shows a little dovishness, maybe something as simple as Powell saying that the cuts are being discussed, well, then we could see the bull really getting excited, and we could see maybe the risk coming back on. That's kind of the setup for this week. This is Randy Kirk. Please hit the like, please hit subscribe, please hit notify. As you know, tomorrow we have the regular programming in the morning. We have Brian White will be around at the noon hour, and then we've got Larry Goldberg helping to celebrate Good News Monday, and it might be the last good news day of the week, but of course we'll still call them good news days anyway. And then of course join Patreon, and obviously, if you haven't placed your order yet, the orders are coming in so strong right now. As you can imagine, it's Christmas. So, or every day, lots and lots and lots of orders. It's looking like I'm going to have to place yet another order in order to make sure we don't run out during the Christmas season. Thank you so much. I don't say it often enough. Thank you so much for joining Patreon. Thank you for my loyal subscribers on Patreon. Thank you for all the folks who have supported the channel through the Cybertruck bottle openers. And thank you for those. If all you do for me is listen and hit the like button from time to time, hit the subscribe button. If you do just those little things, hit the comments from time to time, all of that absolutely helps grow the channel, and we are growing really, really well. I told the folks this morning, if you didn't see that show earlier today, that I have got a new coach. I've got a coach. I don't know what that's going to mean. Hopefully it means better content. I don't know, better something, but we've already seen, I don't know if you saw the numbers over the weekend, but the numbers were really, really high. So we'll see what happens as we go along. All right, let's start here with a note on X from Adrian in the Hat. He goes, it's at Adrian CG. He says, after a long 90 business days, the Mexican ambient agency, Semarnat, has approved the change of land use for Tesla Giga Mexico. And he says, this clears the path to start work on the site. Do we know that this has been holding it up? Is anybody, I don't know if anybody really knows whether it's Tesla going slow. We don't know if it's the Mexican government going slow. Whatever it is, this says that it clears the way. And obviously that's going to be a big question for me with Brian tomorrow, because Brian hopefully will have even more information in our programming tomorrow around the noon hour. All right, we're getting really, really close to 2024. The value of Tesla is going to be heavily determined by what the street believes will happen to auto sales in 2024. What are they going to believe between now and earnings call? And in the earnings call, what will Tesla say about their expectations for sales of vehicles in 2024? And we'll talk in the next couple of seconds here. We're going to be talking about 2024, 25, and 26. I want to bring some clarity to that picture in terms of the overall analysis. All right, worldwide, China and US sales of BEVs are still increasing by 50% per year. This alone should suggest that Tesla has the TAM potential to hit 50% growth. not even taking into consideration all the new markets that they may open up in the next year or so. So it seems clear that Tesla can increase, and so on the production side, so that's on the TAM side. On the production side, it seems clear that Tesla can increase Shanghai by at least 150,000, with Larry Goldberg saying he thinks it could increase by 250,000. We know that Berlin and Austin can increase Model Y sales by 250,000 each just by adding shifts and getting to the original plant capacity. So let's go conservative and say that's 400,000 total, not 500,000 total. Now you add in Cybertruck for 75 grand and maybe Fremont for 25,000. This is a 550,000 increase on 1.8 million. Not bad. I mean, increasing sales by 550,000 vehicles next year would be an enormous success, except it is nowhere close to the 900,000 needed to get 50% growth over 2023, much less continue on the 50% growth pattern that Elon is talking about. So if we assume that Tesla decides early, very early, to just maximize output everywhere, maybe you get another 100,000 between Austin and Berlin, then maybe another 50,000 for Fremont and Cybertruck combined. Still, with a super optimistic approach, you get to 700,000 or 2.5 million for the year, which is close to the 2.53 needed to keep the 50% average going from 2020. Well, some pundits are predicting as little as 2.1. I think that's nonsense. My number is 2.35. Larry's is 2.4. I'm thinking that Tesla might, if they make a prediction at all, they might predict around 2.2. which I don't think would be a surprise, and I don't think it would hurt the stock, okay? But if they're going to be aggressive, they should say Larry's number, 2.4. They got the capacity to do more. All right, it'll be interesting as that all comes through. Now, in 2025, you are not needing 3.8 to get your average 50% per year, which would be another 1.3 million you are needing. I'm sorry, I said not. In 2025, you're needing to get to 3.8 to keep up your average of 50% per year, which would be another 1.3 over that optimistic 2.5. Now that is impossible, or at least really hard to imagine, without substantial Gen 3 production, okay? To get substantial Gen 3 production, you're going to need to start that first factory in Austin later this year. Or if Gary Black's right, start all three factories, start Berlin, Austin, and Shanghai later this year, making Gen 3 vehicles. Now then, but that's what you're going to need. You're going to need a lot of production starting in 2024 to get to anywhere close to the 1.3 million in 2025. Now then, everything changes in 2026. The number becomes 5.7 million that you need to keep that 50% per year going. But it's way easier to imagine 2026 being a catch-up year with Generation 3 vehicles being manufactured at scale in 4 or more factories, maybe even India or Thailand or both, or who knows what additional factories that aren't even kind of in our focus right now. Anyway, just a bit of food for thought as we get into the beginning of 2024. Obviously, as January plays itself out, I'll be doing in-depth with even charts and graphs, because I know you like charts and graphs. All right, let's now look at what is going to be happening this week and what we're going to be, here we go. All right, so nothing on Monday, nothing. Take a breather, everything will be great. Listen to Larry, listen to Brian tomorrow. At 8:30 on Tuesday morning, we will get the first information. Well, 8:30. My program will be, that's 8:30 Eastern. At 7:10, my show will be on, and I will have all the CPI information. I will have all the information that I can possibly gather within that hour or so that I get to read about it, look at the details, and see what I can report to you. Hopefully things that you're not even seeing anywhere else, because I usually try to go super deep, super fast. All right, here's what the analysts think is going to happen. They think that the consumer price index, the, what do you want to call it, the month over month headline number is going to be at 0% again. And that's after being 0% last month. 2 months in a row at 0% on the headline number. Why is it going to be 0%? because the oil prices and the gasoline prices, all the fuel prices, commodity prices, all down. Okay. So that's going to really help the core number, which includes food and energy. Then you got the core CPI that takes out food and energy. All right. And the core CPI, they're thinking, is going to get worse. Last month, it went up 0.2% month over month. And this month, they're thinking it's going to go up 0.3% month over month. And I think that's going to be partially to do with auto insurance and partially to do with the change in the way that medical insurance is being figured. Both of those things are going to, I think, make this number go up as opposed to down or staying the same. Now, this is a place where there could be a beat. Okay, that'd be core CPI month over month. If that comes in at 0.2% again, that would be a significant beat. We could see risk on, we could see the bull going crazy. Now you got CPI year over year on the, what do you call it? The headline number. The headline number, they're expecting to drop from 3.2 to 3.0. Same idea, energy, oil and gasoline in particular is going to be the big effect there. Then the core, and here's the most important one of all, core CPI year over year, they're expecting flat from 4% last time to 4% this time. Once again, if this beats, if this comes in at 3.7 or 3.8, I mean, a significant beat, 3.9, not going to make any difference. That'll be fine. And if all these numbers come in as expected, that's what I'm saying, the bull market will keep going. If all of this comes in as expected, the bull will be fine. But it won't be a Super Bowl. It won't be like, risk on again. What it takes for risk on is for that core CPI year over year to be like 3.7, 3.6, or for the core CPI month over month to be like 0.2% instead of 0.3%. Those are two things that could really make a difference, and they probably go in tandem. If you get one, you probably get the other. Later that day, you get the monthly U.S. federal budget expected to be flat. We'll report on that Monday night with Larry. All right, Wednesday morning, I will be up bright and early again. I will be digging deeply into the PPI, the producer price index. The Fed is not nearly as interested in this as they are the CPI, but they are interested in it. Plus, it turns out that the pundits are not making very many predictions here. So last month, the headline number went down 0.5%. That was really good. This month, they're expecting the headline number to be up 0.1, which would still be great. Last month, the core was only up 0.1%. They aren't making a prediction. And I'm sorry, I can't figure out enough. I don't have enough information that everybody else doesn't have to be able to make that any further prediction on that. So the core PPI year over year, last month was at 2.9. There's, again, no expectation here. They're not telling us what they think. And the headline number last month was 1.3. It would be helpful if these numbers were as good as last month or better. But with the producer price index headline number expected to be higher, it's kind of hard to imagine these other numbers might not be a little bit higher, but stay under that 2% per year would be obviously, if the core PPI came in at 2%, that would be obviously beneficial. Again, this is not going to have nearly as much impact. Then at 2 o'clock in the afternoon, and we'll be reporting this, of course, that's 2 o'clock Eastern. Larry and I will be, that video will come out about 4 o'clock, 4:30, maybe, about 4:30 California time, 7:30 Eastern. We'll have Larry and I'm sorry, that's on Tuesday night. That'll just be me by myself. Maybe I'll go find somebody to help me out on that one, but I'm not going to, sorry, that's Wednesday. That's Wednesday. I'm sorry, Wednesday. That will be Jeff Lutz will be helping me to work this out. That'll be the perfect guy to have on to discuss this. So we'll also be adding in, what did the Fed chairman say? What was the interest decision for the month? If it is a uptick, it will be disaster. If it is flat, it'll be expected. It will not be down. It will not be a drop in the interest rate. What he says in the afternoon, as usual, is the key. Will he say the magic words? We are at least considering cuts. All right. And then Jeff Lutz and I will be on Wednesday afternoon to discuss that. Thursday, we have initial jobless claims as usual. That's expected to be flat. 220 last week, 220 this week. Again, this number has been all over the place. So the predictability of this number is low. Also, the continuing unemployment number is a big one to look at. And that one has been a little hard to predict also. So this, even if everything goes perfect on Tuesday and Wednesday, this number could come in weird, could come in at 300,000 or something. I'm sorry, at 300,000, which would be good news for the Fed and bad news for the economy. And we don't know how that, but coming in the other way, like if there's only 105,000 or, 170,000, a really, really low number of initial jobless claims, that could upset the apple cart that might have been created the two prior days. Then we have also the import price index that's coming in, expected to be down 0.9%. The China numbers are dropping in particular, but all import numbers are coming down. And then you have the import price index minus fuel. Last month, that was also down, and no expectation on that when they're not giving us a number there. Then we have retail sales. And again, this is one of those things where you want it to be high because you want retailers to do well so that the wholesalers will do well, so that the manufacturers will do well. But the street is expecting retail sales to be down 0.1% again after being 0.1% last month, but they're expecting that mostly to come from vehicles because retail sales minus autos, they're expecting that to be up 0.1%, which is about a 1.2% year run rate. Don't know, don't have any I don't. I'm not going to make any prediction there. And then later that day, which we won't be able to report on until Thursday night, when Brad Ferguson is with me, would be business inventories. They're expecting those to be neutral, flat. They were up last month by 0.4%. They're expecting those to be flat. We're seeing some reductions in inventories in some of the regional reporting, so maybe the flat number is right. But going into Christmas, you might expect inventories to be up. I don't know. Anyway, then on Friday, we have the Empire State Manufacturing Survey. That was up huge last month, a big surprise. They're expecting at 9.1%. This month, it's expected to be only at 3.5%, but still up, which is pretty good for the New York area. And then we have industrial production numbers coming out later that morning. Larry Goldberg and I will be discussing that in the afternoon report. And that is, last month it was down 0.6% on industrial production. This is expected this time to be up 0.2%. That's interesting. And then capacity utilization also up. So maybe because we're going into Christmas, it would be up. It was 78.9. They're expecting to be 79.1. Anything over 80 is considered to be excellent. So getting close to 80 is good. All right, that's what we can expect next week. Holy mackerel, it's gonna be a wild week, or maybe not. Maybe it'll be really, really just everything goes perfectly. Never does. Okay, so now we have from the Kobayashi letter, which he says, according to Apollo, the debt to GDP, this is the federal debt to GDP ratio in the US is on the track to hit 200% within the next 15 years. Less than 20 years ago, the debt to GDP ratio was just 50%. All right. So a lot of people talk about the 100% level being, when your debt is as high as 1 year of GDP, that is kind of a bad note. That's kind of like, okay, time to watch out. And he's saying, oh, well, over the next 15 years, if we continue on the same trajectory, it might get to 200%. If you see things like this, always analyze. Always think it through. It's not going to continue to go up at this rate. We're just coming off this COVID craziness, and we're not going to continue to see the U.S. debt go up at those numbers. And if it did, at some point, we would vote the bums out, and we would vote some people in that would stop the nonsense. So this is crazy to think that this is going to continue at these numbers. It's just scare tactics. It makes no sense. I think it's a horrible analysis. This is why sometimes I don't like the Kobayashi. What Kobayashi does great is he brings charts, and then it's up to us to analyze them the right way, and that is not the right way. All right, let's look at the numbers in the pre-market. Let's check out what's going on. We have got the bonds right now. The 10-year is flat. It's actually up like marginally, like 0.002. All right, so it's basically unchanged. The 2-year is actually unchanged, but the 2-month is up 2 basis points, continuing the inversion. I'm telling you, there's a time coming. This is not investment advice, but I got it right last time. I am telling you, there is a rally coming on the 1 month, the 2 month, the 3 month, the 6 month, the 1 year, the 2 year, and the 3 year. At least those, and maybe the 5 year. The 5 year, no, the 5 year still at is at 4.255. That makes sense. But even the 3 year is at 4.466. There is deals here. Not investment advice. Do your own homework. Make your own. Yeah. Anyway, I did read a Wall Street Journal article earlier today that was agreeing with me, saying that the baby boomers are diving into bonds. Yeah, that too. Anyway, they're diving into bonds because it's just an amazing deal. Why not? Let's see. Let's go to the rest of the numbers here. We have got the Dow Jones Industrial is up 21 points. It is 0.06. We've got the S&P down 0.75. That is down 0.02%. And the NASDAQ future down 25.5. That is down 0.16%. So in general, I would call that fairly flat, but with the return to, at least in this pre-market, the return to the rotation. I'm surprised to see that rotation ending last week. I am not surprised to see maybe the beginning of some evidence that that rotation is back in play. All right, now we got to Bitcoin. For those who follow it, it is down 336 at 43.6. We have got the dollar up, and we have got gold up $6. It's at 2021. So that's down from last week's kind of 2040 was kind of the area it was in. Now it's at 2021. I've got some more digging to do, but I've got some interesting information about gold in terms of, well, just let me tell you that the gold is being purchased in big numbers by the central banks, huge numbers, way bigger than usual. And that is possibly part of the reason why gold is up to record highs. Now we got oil up 23 cents, really immaterial at 71.46, staying down there in that 67 to 74 trading range that I am hoping will stay as we go forward. And that's, of course, there is no pre-market on Tesla. We won't know that until the morning. Okay, so if you haven't already done it, hit like, hit subscribe. Did you get any value out of the last 15 or 20 minutes? If you got some value at it, consider Patreon. If you're getting $5 a month worth of value, just consider Patreon. If you're getting $10, even better, sign up for Patreon at the $10 level and get both of my books on both of these Tesla Musk books on, for free on audio. And then, or you can get, instead of that, you can get one of these for free, either in the stainless version or in the camo version. You can get it either way. I have got tons of them. I bought a whole bunch of them for you because the orders are coming in on both through the PayPal, but also through Amazon. If it's more convenient for you, it costs $5 more, but if it's more convenient, buy them on Amazon. Sold a whole bunch of them on Amazon over the weekend. It's very exciting. I'm very glad that one of my listeners was kind enough to send me this truck and offer it to me to be able to help support the show. Anyway, so as you know, $25 for one, $45 for two, $65 for three, $90 for four, $110 for five. And by mentioning that earlier today, somebody bought four. And then we've got $210 for 10 and $400 for 20. That makes it $20 a piece if you buy 20. All right, let's see. Send it to paypal.me/Randy Kirk, all in lowercase letters. And then if you're out of the country, I need an extra $20 to ship it. It's getting if you're out of the country, you need to order it now if you want it for Christmas. I mean, you're getting really close. Most places takes around 12 days. So, you're right down to the line if you're outside the country, unless you want it expedited, in which case $20 is not going to be enough. Probably around 60 for an expedited shipment outside the country. And then remember to say camo or regular. Camo or regular. Let me know which one you want. Saves everybody a lot of time and trouble. If you're one of about 8 or 10 people out there that didn't say it, and you haven't seen your vehicle yet, you haven't seen your bottle opener yet, get in touch with me and say, I haven't got my if it's been like 2 weeks and you haven't gotten it, send me a note because you might not have told me. And I've been sending you emails to the email that's in PayPal. I'm doing my best, but I've got a bunch of folks, maybe 8 or 10, that I can't ship because I don't know which one to send. All right. That's all I got for you today. See you in the morning. And then Brian White at around the lunch hour and Larry for the Good News Monday edition. All right. Thank you so much for watching. It's been great talking to you.